Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report that's got it all: borrowing, lending, and even a CFO shakeup. Don't worry, we'll break it down without the financial jargon that usually puts people to sleep. So this is an 8K filing, a current report. Think of it as an alert for major events happening at a publicly traded company. In this case, Chicago Atlantic BDC Incorporated is the company we're looking at, and the event happened on February 11th, 2025. Chicago Atlantic BDC Incorporated is basically a company that lends money to other businesses, especially those in the cannabis industry, and they are traded on the NASDAQ stock market with ticker symbol LIEN. This company is still considered an emerging growth company. That just means they are relatively new and have less strict reporting requirements for now. These checkboxes are just legal disclaimers about whether other information was released at the same time. Nothing to worry about. This just says that their common stock is traded on the NASDAQ, which we already knew. And here's confirmation again that they are an emerging growth company. This is here to show that they are not deciding to delay standards from accounting practices. And now let's dive into it. Item 1.01, the meat of the report is about a new borrowing agreement they entered into. Basically, on February 11th, 2025, Chicago Atlantic got a senior secured revolving credit agreement. That's a fancy way of saying they now have a credit line they can borrow from, and it's secured, meaning they've put up assets as collateral in case they can't pay it back. Western Alliance Trust Company is acting as the administrative agent. Think of them as managing the loan. Western Alliance Bank is also involved as a lender. The lenders have agreed to give them up to $100 million to borrow. Chicago Atlantic can ask for more money later, but it has to be at least $5 million at a time. They can also get letters of credit up to $5 million, which are like guarantees to other companies that Chicago Atlantic will pay. They can borrow under this agreement until February 11th, 2027, and the whole thing is due by March 31st, 2028. The interest rate they'll pay is based on something called the Secured Overnight Financing Rate, plus 3%. This rate fluctuates, but basically it means they are paying a standard rate plus a premium. They also pay a fee of 0.50% on any unused portion of the credit line and fees for any letters of credit. This loan is secured by pretty much everything the company owns, including their investments. If they create any new companies in the future, those companies would also have to guarantee the loan and put up their assets as collateral. There are rules about how much they can borrow based on their assets, and they have to maintain certain financial levels like a minimum amount of stockholders' equity and net worth. They also have to make promises about their business and are responsible for covering some losses that may occur. If they miss payments, there's a change in control of the company, or they break the agreement, they could be forced to pay back the loan immediately. This could hurt their financial stability. To enter the credit agreement, the board of directors and the company's advisor agreed that the costs to borrow do not count towards expense cap of 2.15% per year. WotC and Western Alliance Bank are holding their assets for them. These agreements allow them to hold securities, loans, cash, and other assets on behalf of the company. They can be terminated by either party with a 60-day notice. Basically, the banks involved may have other relationships with Chicago Atlantic and could receive fees for those services. That's pretty standard. Okay, so that's the summary of the credit agreement and custody agreements. It's essentially how the company is financing its operations. Now we'll look at the other important change. This section just says that the information about the credit agreement is included here too. Now we're talking about a change in leadership, a personnel change. Mr. Umesh Mahajan stepped down as Chief Financial Officer on February 14th, 2025. He is still with the company as Co-Chief Investment Officer. Apparently he wanted to focus more on investing. Martin Rogers is now the new Chief Financial Officer. Mr. Rogers has a long career in accounting and finance, with experience at companies like First Eagle Alternative Credit and PricewaterhouseCoopers. He seems well qualified for the job. This is a standard disclosure about a press release related to the credit agreement. Basically, they announced it to the public. Now, what does all of this actually mean? Asterisk, asterisk company direction. Chicago Atlantic seems to be strengthening its position as a lender, particularly in the cannabis industry. The new credit agreement shows that they have access to capital, which is a good sign. The CFO change is interesting, but it seems to be a strategic move to focus Mr. Mahajan on investments. Asterisk, asterisk risks and opportunity. The main risk is that they are lending to companies in a volatile industry, the cannabis industry. If those businesses struggle, Chicago Atlantic could have trouble getting their money back. Also, they are taking on more debt, which could be a problem if the economy slows down. An opportunity for Chicago Atlantic is that the cannabis industry is growing, and they could benefit from that growth by lending more money and increasing profits. Asterisk, asterisk stock price outlook. Looking at the market as a whole, there are indicators of positive growth. Chicago Atlantic is looking positive and well positioned for continued growth. Asterisk, asterisk conclusion. Asterisk, asterisk, I'm leaning toward a bullish outlook on Chicago Atlantic. They have access to capital, a growing market, and an experienced team. However, it's important to remember the risks associated with the cannabis industry. Asterisk, asterisk price recommendation. I recommend looking at the $18.22 range for this stock. Thanks for watching. If you enjoyed this analysis, please subscribe to Corporate Decoder for more breakdowns of corporate filings.